Now, South Korea's stock market has witnessed one of its sharpest reversals in recent history. After surging more than 130% between late 2025 and June 2026 on optimism around artificial intelligence, the benchmark KOSPI index has now fallen over 40% from its peak in just about a month. The sell-off has wiped out nearly $2 trillion in market value, erasing massive investor wealth. Now, the rally was largely driven by AI-linked chip makers such as Samsung Electronics and SK Hynix, which benefited from booming global demand for high-bandwidth memory chips that are used in AI data centers. At one point, the two companies accounted for roughly half of South Korea's stock market, making the broader index heavily dependent on the performance of just a handful of AI-related stocks. Analysts say the correction was worsened by record levels of leverage. Now, retail investors, they had poured in their money into single stock leverage exchange-traded funds, borrowing heavily to amplify bets on AI winners like Samsung and SK Hynix. As stock prices began falling, leverage positions triggered a wave of forced selling, accelerating the decline. The market also witnessed multiple trading halts after sharp declines. Authorities have now announced emergency measures, including limits on retail investment in single stock leverage ETFs and higher trading costs, while introducing round-the-clock market monitoring. However, analysts caution that these measures may have limited impact on existing leverage positions and do not address similar products listed overseas. The market collapse has sparked widespread public anger. Protesters placed around 40 funeral wreaths outside South Korea's National Assembly, accusing the government of failing to protect retail investors. They carried messages such as slaughtering retail investors and reminded politicians that investors are also voters. Across social media, individual investors have shared stories of devastating financial losses. Some said that they lost money saved for buying a home, while others claimed that years of savings, investments, gains, and even borrowed funds had been wiped out in the crash. The episode has become a stark reminder of the risks associated with concentrated market bets and excessive leverage, especially during periods of extreme optimism surrounding emerging technologies like AI.